Very good morning. Welcome to Chartbusters. I'm Nigel D'Souza, and joining me as always is Mangalam Malu. Well, Mangalam, we started off, we went, closer to around that 18,600 odd mark. From there, we've seen a bit of a bounce, so good bounce from the lows. But more than the headline index, I think what we'll track is the mid-cap and the small-cap performance. Even in Friday's trading session, the Nifty was around 115 points. But you felt like there was some traction in the broader markets, and that's something that will take center stage as well. So let's see whether or not that can continue. For the time being, it started off on the good note. But how do you trade the index first up? Well, Shivangi Sarda, she joins us to give us a technical check. Hi, Shivangi. Always good having you on the show. Well, that initial dip, the wee bit of a dip has got bought into, and we're around 35 points off the low point of the day. What's your sense on the index first up? And then you could run us through your stocks as well.
Good morning, Nigel. Good morning, Mangalam. Thank you for having me. So we've seen that, Nifty index is witnessing a little bit of a breather after the rally of the last 9 weeks. We've seen continuous uptrend and, some slight cool off at the higher zones, but overall the setup is quite strong. The good part is that it is respecting its previous week's low and it does not breach that. So overall support-based buying would keep the index afloat. So overall, the heavyweights are in pressure, but the rest of the stocks are in momentum and are going to support the index at higher zones. India VIX is slightly up, but overall lower levels is still supporting the bulls at higher zones. So we could see an upside towards 18,800 zones from here with a crucial support of 18,350. Now talking about the banking index, we've seen after 7 sessions of underperformance, Bank Nifty is finally contributing and finally relatively outperforming the index. So the banking index IVs have also cooled down, which is supporting the bulls. So overall, the banking stocks and the index also looks quite positive. But of course, we'll have to be a little watchful at the upside. So overall upside, we could see 43,500 levels with a support of 42,750.
All right, take that point. As we speak, the Bank Nifty has just about broken into the green from that dip. So we'll monitor that. Shivangi, a lot of stocks actually doing well, and 2 of them really stand out this morning. One of them is Interglobe Aviation, which has moved to the high point of trade. And this is interesting given that we've seen an overnight jump in crude prices. And despite that, that stock's doing well. The other one is Indian Hotels. It had seen a bit of a correction from the top and now is bouncing back once again. It's December time, a lot of people traveling, etc. Individual stocks, what do you have on your list this morning?
So individual stocks, I have my first pick is from UBL. It is coming out of its weekly consolidation and we can see a positive divergence over here of the mechanical indicator, which is quite positive and would take the stock higher to 1820 plus zones with a stop loss of around 1720. My second pick would be from the metal space. We've seen good momentum here and many of the metal stocks like Tata Steel, Vedanta are looking good. So I am liking Vedanta over here, which is continuously making higher highs, higher lows from the last 4 sessions. And follow-up buying can be seen with open interest addition in the long side at all the support zones. So base is shifting higher and it could take the stock higher to 330 levels with a stop loss of 310.
Okay, all right. Thanks a lot for that, Shivangi. Well, let's focus on a couple of stocks then from the broader markets. Rico Auto, we had highlighted this earlier today that on Friday the volumes were massive, and though the auto sector was down, the stock was up. Today as well, the stock opened with a cut of around 2% odd, but that one's seen a big recovery from the low point of the day. In fact, it's up close to around 6% from the day's low. So some of these stocks in the broader markets are moving around. Remember, by no stretch of imagination, these are recommendations. Just the price action is something that we are highlighting, and also the delivery-based volumes were quite high. Well, let's turn our attention then to our special segment where we get you a few ideas for profit from Moneycontrol Pro. Lekha joins us to run us through a stock that is tracking very, very closely. Lekha, take it away.
So we like PI Industries Limited in the agrochemical space. The company has shown strong resilience in its Q2 FY23 results despite challenging market conditions. Now, this was supported by its high operating leverage, better product mix and pricing. The company is a leading player in the CSM exports business, that is, the custom synthesis manufacturing business. It has a strong order book of $1.8 billion and a robust pipeline of more than 40 products. The company is also looking to diversify into the non-agrochemical space and is actively looking to enter the pharma intermediates and electronic chemical manufacturing. And it has been receiving strong order inquiries for the same. The company is also heavily investing in backward integration. It has fully commissioned its 2 multi-product plants. And these investments will not only save costs for PI, but will also help in improving the overall capital efficiency and secure its supplies. In terms of valuation, at current market price, the stock is trading at a PE of about 38 times its FY24 projected earnings, which is at a premium to its historical average. But given a solid business model, we think PI can be considered for a long-term investment horizon. And in the near term, investors should look out for any inorganic initiatives by the company for its pharma intermediates business.
All right, Lekha, thanks a lot for that. Before we step into a short break, just pull up the intraday chart of Ethos. A big move on that counter. Remember, we did have the management of Ethos join us last week itself, indicate that the two new brands that they've signed on exclusively will help in increasing their share of revenue from exclusive brands. At the same time, will also aid their average sales price as well, which is moving higher because the two new brands that they signed on have average sales price of upwards of 10 lakh odd rupees. This morning, there was a brokerage note citing an up move in the stock as well, largely on account of the gains that they will get in the larger market of luxury goods that these guys operate in. So a big move out there. We'll take a short break, come back on the other side. We'll be joined by the management of Rama Steel Tubes. The stock is up 20% this month, and they won a couple of orders as well. Stay tuned.
यूं ही नहीं मैं बन जाता हूं। कुदरत के कोने कोने से खूबियां खोज लाता हूं। गुणवत्ता की गहराइयों का गोताखोर हूं मैं। पर उम्दापन की नई ऊंचाइयों को छूना चाहता हूं मैं। यूं ही नहीं मैं रजनीगंधा बन जाता हूं।
बात सिर्फ मेरी नहीं, देश की थी। माइनस डिग्री में भी कॉन्फिडेंस प्लस में रहता था। वो जज्बा आज भी बरकरार है सही मूव लेने के लिए, क्योंकि अब बात सिर्फ मेरी है।
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है। इंडिपेंडेंट फ्लोर्स फॉर द इंडिपेंडेंट यू।
Do we have to wait years for a cure?
Hey, Mommy, can we go make some pancakes?
Yeah, let's go. Or are we smarter than that?
We have unique opportunities to influence human behaviors. Unique opportunities to tell our clients that they need to be working not only to sell product at an affordable price, but they need to be working to contribute to communities, to make sure people feel better if they consume their products. This is what we have called how to make a meaningful difference to brands and businesses.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
A multi-asset portfolio for your wealth is like a wholesome meal for your health. Presenting Baroda BNP Paribas Multi-Asset Fund aims to provide diversification and optimal risk-adjusted returns. NFO closes on 12th December 2022. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back. Well, the Nifty has recovered a little bit from the low point of the day, but the point we've been making is that the broader markets, they are seeing a fair bit of traction. And one such stock that's done very well in the last 1 month or so is Rama Steel Tubes. You pull up the last 1 month chart, you'll see that that's done a big run. But the point that we're trying to get to on the show is, let's see whether or not the fundamentals as well are as strong. We have Mr. Richie Bansal, Executive Director of the company, who joins us on the show. Hi, Richie. It's been a long time since you joined on the show, so good to have you.
Hi.
Well, over this past weekend, you have announced an order win of close to around 7 crores odd, which is reasonably small. But you're saying that your order book is shaping up quite well, and you're on target to hit your revenue targets that you've set out. So, two-part question: yes. What is your order book currently? And second, what are your revenue targets for FY23 and FY24? Go ahead.
Hi. So at the moment, the order book of the company is close to 146 crores. And in first 2 quarters, we have touched the revenue of almost 600 crores. whereas in the preceding year, our total revenue was 786 crores. So the target for the current year is close to 1100 to 1200 crores of revenue, the top line of this financial year. And
order book, you said, is only 146 crores as of now.
Yes, the total order book at the moment with the company is 146 crores.
So we presume that you'll be winning a lot more other orders as well for you to go ahead and reach that 1100.
We have at least another 4 months to go. We have a quarter and a month to go. So we're expecting another 150 crore rupees orders from the PSUs. And as well as then we have our own trade markets. We have our channel partners where we're getting the orders on a regular basis.
Right.
We have already crossed 600 crores. So we are on lines with the targets what we have targeted.
All right. Also, tell me one thing. I was looking at your margins, and over the last couple of quarters, I mean, last year you had margins closer to 5%. March you went all the way up to 6% as well. But the first 2 months, while you say that your revenues are almost as much as all of last year, your margins are 2.5 odd percent. So even if you reach that 1200 crore mark, your EBITDA will not be as much as it was with the same revenue last year. Going forward, what kind of margin improvement can you guide for, Richie?
Operating margins is not the problem. The problem what has happened in the industry, it is across the sector or across the globe. From last 8 months, the steel prices are continuously coming down. We have seen a sharp decrease of these raw material prices by 30 to 35%. So till March, the pricing of the steel what we were buying was 76,000 rupees per ton, and right now it is at 53, 54 rupees. So every month we are, looking at a decrease in the steel prices by 3 to 4%. So that is what is impacting the bottom line. That is what is impacting the EBITDA margins. Otherwise, in the operating margins, there is not an issue at all. But because we carry forward, we have stocks for 45 days, 40 days. So that stock losses keeps on accumulating.
I think
so that is why the margins are coming down. Otherwise, we are looking for a strong growth in this sector. There's huge demand. A lot of projects are coming up.
Yeah.
And right now, we are already sitting at the bottom of the steel prices. I don't see that another further correction in the steel prices. We are almost at the bottom.
Okay.
So we see that margins will definitely improve.
Okay, so Richie, the sense that I get is that you were sitting on higher cost raw material, and that's why your margins were getting a little bit squeezed. Now with steel prices bottoming out, things should improve from here on. Are we on the right track?
We are not sitting on a higher price raw material. The raw material, whatever we are buying every month, it reduces by 3 to 4%. So every month there's a decrease in the steel prices. Because this is a continuous process. We buy every month, we buy every month.
I think Richie, we're talking about the same thing, but we take that point on board. What is the margin outlook from here? It's come down to 2.5%. Steel prices, as you said, it looks like it's giving signs that it's bottomed out. In China, currently as well, the prices are higher, and hopefully that gives some sort of a base. So keeping all that in mind, say by Q4, what kind of a margin are you looking at? You've made some cost-cutting measures as well, some kind of backward integration as well. What are the steady-state operating margins, EBITDA margins, that we should be working with from around this 2.5% odd? Go ahead.
From Q4, we are looking at recovering the margins from 2.5 to 3% to back to 5.5 to 6.5%.
By when?
And then we are going from Q4. We are looking at margins to recover from 2.5, 3%. It should come back to normal 5.5 to 6.5%.
Okay.
And going forward, we are looking for better EBITDA margins as we have done some backward integration. And even we have started another 30,000 tons of capex what we have done in our Khopoli plant. We're going to start with the production in this current month. So that is a 100% value added product, which is going to give us a 10 to 12% EBITDA margin. So on a console level, our EBITDA margins will definitely improve.
All right. While your sales have jumped a lot in the first half of this year, what's also jumped are the receivables. The receivables have been higher by over 130 odd crores. And as a result of which your operating cash flow is negative. Can you give us a sense of by when do you receive this money and when does your operating cash flow turn positive?
See, in last 3-4 months, we have delivered more than 75 to 80 crore rupees of government orders. So in the government orders, initially you have to supply the material there's a timeline that we have to supply within 35 to 40 days. So that's why the receivables have gone up. But we are expecting the receivables to come down within a month's time.
Okay, all right. So you're saying this receivables picture, you'll start receiving some of this money. Because I'll tell you what, I was just doing a couple of numbers. In the first half of the year, as you said, your revenues have grown superb. It's been a big increase. In absolute terms, it's up by 250 crores. But your receivables itself are up by 140 crores. So for the time being, those two are not tying together. But you're saying in the time to come, this will reverse. Are we getting that correct?
That's 100%.
And when do you give an operating cash flow a positive number? It's still negative.
In Q4, it will be a positive number.
From Q4 onwards, you'll deliver a positive number, right?
That's right.
Okay, all right. Also, you have been talking about some, expansion plans. You're talking about Nigeria projects as well, and a couple of other capex is what you'll have highlighted. So give us two numbers. One, what is the current net debt in the books? Two, what is the capex that you've outlined?
See, right now, we don't have any long-term debts. We just have working capital limits. And our working capital limits are somewhere close to 130, 135 crores. We just have working capital limits. In our company, there are no long-term debts. That is negligible. Must be 3, 4, 5 crores. That's it. And looking at the capex, we have already done a capex in our Maharashtra Khopoli unit for 30,000 metric tons per annum, which we are expected that production will start within this month. So that revenue will add on from Q4, and that is a 100% value-added product.
Okay.
And then in Nigeria, we are about to complete our capex of another 20,000 tons, which should be in operation by first quarter of next year.
Okay. Final question, Richie. The market likes to see good revenues and better margins, but the cash flows is most important. As you're saying, you will turn operating cash flow positive. But you've not paid any dividend, I think, as well for the last few years. If things are going to turn around, you'll start paying dividend?
In last financial year, we paid an interim dividend.
Okay.
And this year as well, we are going to...
So you're going to have a dividend policy in place?
Definitely,
right.
For sure.
Raji, just one more before we let you go. You said that your new plants will have high value-added products, etc. Some of them have even 10 to 12% sort of margins. By fourth quarter, you said margins will normalize to 5.5–6%. But after that, you have cost-cutting measures coming into place. You also have high value-added. So from a long-term standpoint, what are your margins likely to stabilize at? Are we looking at numbers closer to 8–9%?
We have 2 to 3 strategies what we are working on. Right now, we are increasing our market share. So we are increasing our volumes, we are increasing the market share. Secondly, we are increasing number of SKUs, which can give us higher EBITDA margins, and then we are adding more value-added products.
Okay.
So for value-added products, this is the first step what we have taken of putting up this 30,000 metric ton line.
Yeah.
And once this stabilizes, we're gonna repeat the same product on a pan-India basis.
Okay, all right.
And our target is to go up to 7.5% to 8.5% of EBITDA margins in coming times.
Okay, 7.5% to 8%. And what is your market share? Just give us that one number as of now.
See, it will be very difficult because the market share, if we talk about the organized sector, in the organized sector, our market share should be somewhere close to 5%.
And what's the breakup between organized and unorganized?
50%.
Okay. Take that point, Richie. Thank you so much for joining us, giving us all those details with regards to your business going forward. Wish you good luck for the remainder of this year. With that, we slip into a short break. On the other side, we focus on some of the stocks which are buzzing in trade today. And mind you, there are a few of them. Back, we have a new listing of all two companies, which is LTI Mindtree. They trade together today. And the listed shares are on the bourses. The stocks is lower. What are the details? Rima joins in with all of that. Rima.
Thanks so much for that. So LTI will now be called LTI Mindtree, and the ticker, instead of being LTI, will be LTIM. Now, what has changed? Everything about the merger was known. But if you remember, the swap ratio told you if you have 100 shares of Mindtree, you will get 73 shares of LTI. So now those extra shares of LTI Mindtree will now be available for trading. So if I had Mindtree shares, I will now in my account have those LTI shares post the swap ratio. So this share base has gotten expanded. So that's the only change which has happened. There was not expected to be any big stock price impact because all of it was priced in. What's the merged entity looking like? It's the 6th largest Indian IT company by way of revenues. The annualized revenue run rate, if you annualize the Q2 revenues, should be in excess of $4 billion. It emerges as the 5th largest IT company by market capitalization with a market cap which is closer to 1.5 lakh crores. It overtakes Tech Mahindra as well. The portfolios of the two companies are seen fairly complementary. The company, in an interview to us just last month, said that the two companies together would have more than 700 clients, but only 10 to 12 of them are overlapping. What's the risk per se? One is expensive valuations, especially compared to the other large cap peers as well as the mid cap peers. It trades at close to 30 times forward multiple, and some shareholders will be holding LTI as well as Mindtree. Now you're going to be getting a lot more shares of only one entity. So suppose you don't want it, there is always that risk of that excess supply getting sold into the market. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, on that note, though, we'll have to wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.